How's it going, everyone? It's Sam. We have a massive warning about what's happening in the economy here today, coming from some really influential people. We also have notes on what Jerome Powell just said, causing the market to fall down towards the end of the trading day. I'll give you my thoughts on what he said to a lot of different topics. There's also a top 10 cryptocurrency that just fell by 70%. And I need to clarify that a little bit more because you might be looking for that. It's one of the top 10 by fully diluted valuation. It's definitely one of the top 100, no matter what metric you look at. It's crazy what just happened, but it's exactly what a lot of people predicted. I also want to talk about what I'm seeing in the crypto market, some news that's happening right now. I'll also talk to you about some cryptos that I'm watching and maybe even have been buying recently. And I was about to post this when I looked, and there are multiple banks falling down significantly, and the next one looks like it's about to die, maybe going to FDIC auction this week because of what the Fed just said and them pushing the banks over the edge. So we'll talk about that partway through this video too. Lots of stuff to cover. If you don't mind, hit subscribe underneath the video, turn on that bell notification. I also want to say I am partners with Nord VPN, and I'll leave a link to that underneath the video. I'm not going to give you the whole 2-minute spiel that I gave in my last video, but I would highly suggest if you own crypto, you get a VPN. It's just going to help you with your safety, and it could help you not just keep your money, but it could also help with safety concerns overall. So check out that link underneath the video. You get a lot just by signing up with that link. So let's get into it here. As you can see, Bitcoin has actually fallen a little bit since the Fed meeting. The whole market's down about 1%. Stocks fell towards the end of the day as well. But keep in mind, we do have a couple big events coming up here very soon. So tomorrow we have Apple earnings, the biggest company, I believe, in the US reporting earnings. Obviously, that's going to determine what happens with the market to a large extent tomorrow. And on Friday, we have CPI coming here actually really soon. 1 week from now, we have CPI. I believe we also have PPI right after that. So next week, we are going to get some big pieces of news as well. Then even this Friday, we have the unemployment report. We have the unemployment rate, hourly wages. There's a lot coming out this week still. So pay attention to what's happening in the market. There could be a lot of volatility. Keep in mind, though, we are still up so much from the beginning of the year, whether it's crypto or whether it's stocks. I was just looking at all the year-to-date returns on my accounts, and they're insane. They're 30%, 40% on some of them. So we still have come up a lot, and I still think that the market's looking pretty good. And based on what Jerome Powell said, I think we have room to be bullish long-term on the market. There could be volatility short-term, but we definitely have some exciting things happening. Now, one thing that is not so exciting, it seems like something's going on with the Ukraine and Russia conflict. I don't know if I should give my thoughts too much on this on YouTube, but apparently there were a couple drone strikes last night. It seems like there are people walking up here when it happened, and then, there's that little strike there, but sounds like Russia is gonna go attack Ukraine because of this, or they're gonna have some kind of retaliation. Ukraine says we didn't do it. Could be a lot of different things. It could be someone in Russia. It could be Russia themselves. It could be Putin trying to do all sorts of stuff. I'm not trying to throw that opinion out here again on YouTube. Now, private payrolls came in, surged a lot this morning. The labor market's still very tight. It's looking really good. Which obviously is helping the market a little bit here today, because now we're not just thinking bad news is good news is bad news. Now, we want that strong labor market, because it does seem like the Fed will flip the script here soon. They're going to pause rate hikes, which we'll talk about. Powell urged to halt interest rate hikes by Warren and Sanders. This came in yesterday. Also, Elon gave a warning. The Fed is making decisions using stale data. This is like driving a car while looking out the rear window. Fine when the road is straight, but destined to crash when the road is winding. Saying basically that the landscape is changing. It's not like we're just having to continuously pump out 50 basis point hikes like at the beginning where we were so far behind, right? We had to go forward. Now things are changing really quick. There are things that are breaking, and they're still looking at old data, causing even more problems. So he's giving a pretty big warning there that more things could break. Now, I said that we were going to talk about banks failing. PacWest is said to weigh strategic options, including a sale. I don't know where this is coming exactly, but you can see PacWest is down 50% in the post-market, down to a $350 million market cap. And when we look at the last 5 days, it was up at $10, now at under $3. If we look a couple months back, this was a $25, $26 stock, now down 90% in a couple months. And if we go years back, it was up even more than that. So this would be about the sixth largest bank in U.S. history to collapse now. It was around $33 billion worth of deposits at the end of last year, but it's bringing down other stocks too. First Horizon Corp down 6.6%, Comerica down 6.5%. A lot of other banks falling down as well with the news of the Fed raising by 25 basis points. Now, let's look at what Jerome Powell said exactly, and we'll try not to spend too much time on this because there's a lot else I want to cover. FOMC statement, 25 basis point hike, omitting language signaling more rate hikes ahead. So that's pretty bullish. That's what the market assumed, and that's what happened. Jerome Powell's speech, he said that, or he commented, the banking sector has improved since March, which is interesting since we had one of the largest banks just collapse. They'll continue to monitor the situation. They still strongly are committed to bringing inflation down to 2%. Labor market remains tight. Some signs that show that the labor supply and demand are coming back in balance, but obviously the labor market's still extremely strong. He said credit conditions have been tightening after strains in the banking sector. This will weigh on the economy and the economic activity here in the U.S. Future policy firming will depend on incoming data. So let's get to some of the questions. Someone said, should we read the statement as you're getting ready to pause hikes in the next meeting? And what would a recession look like and feel like? He said the decision today was 25 basis points. We did change the wording, not saying they anticipate further rate hikes anymore. They think that the rise in unemployment will be less than prior recessions. So they think if there is a recession, it won't look exactly like what we've seen in the past, that there won't be as many people out of work. Do you think further consolidation in the banking sector would increase or decrease stability? JP Morgan is getting even larger. He goes on to say consolidation has been happening over decades. Having small, medium, and large banks is a good thing in his opinion. They serve different clients and demographics. The FDIC runs the process of selling banks, though, and he thinks it's a good policy to not let the banks make large acquisitions, but this was a failing bank, so they kind of got around some of the laws with it. He didn't say that they got around some of the laws, but he said it was different because it's a failing bank. At the March meeting, you said the tightening of credit conditions due to bank stress could be equal to one or more rate increases. Since then, how have your estimates changed? He said it's hard to estimate a specific amount, but generally when banks raise credit standards, it makes credit tighter. Impossible to know the exact amount that affects the economy, though. Do you think the current rate is sufficiently restrictive? He said we don't have enough data. We'll have to see more data. Basically, when the next meetings happen, we'll have to look at what just came out, and then we'll know. If the whole point of slowing down the pace of interest rates was to see the effects of your moves, and now there are bank failures and predictions of a recession, why is it necessary to raise rates today? He said the reason we are trying to reach a level of policy that is sufficiently restrictive to bring down inflation to 2% over time. We have a balance of risk, basically not doing enough to get inflation down and going too far in the other direction. Policy is tight right now. If you put credit tightening on top of that in quantitative and QT, we are not far off and possibly at a sufficient rate now. So basically he said, it's hard to know how far we're pushing the economy. There's a significant delay, but we do think we are pretty much done. He thinks that because they're shrinking the balance sheet, because of credit tightening and quantitative tightening as well, they may be done. Someone says, would you be okay with a prolonged 3% inflation rate? He said, no, they still have a goal for 2%. How is it possible to avoid a recession when the summary of economic projections, analysts and investors are suggesting a recession? He said, we still have a very tight labor market this could be different. This time could be different. He says, famous last words, there is still so much excess demand, but wage increases have been moving down. He thinks that there is a better chance we don't have a recession than we do have a recession. He kind of switched. Before he thought there was about a 50-50. Now he thinks that we probably won't have a recession. What are you looking at during the next meeting? Are you looking at future projections, past data, etc.? He says we look at projections based on past data, labor data, inflation, wages, economic growth, etc. Particular focus is on what is happening with credit tightening. That was pretty interesting. Specifically, what they're looking at is credit tightening. Is this affecting lending? Then how about what about the idea of rate cuts? Could that happen this year? He says we have a view that inflation is going to come down, but it will take time. In that world, it wouldn't be appropriate to cut rates. So kind of confusing there. But if non-housing service inflation weakens, then we would consider cutting rates, essentially. That's kind of what he alluded to. A few more months of data may be sufficient. So he gave us more clarity on what they've said in the past. Basically, they are not saying that they're going to completely cut off rate hikes now, that they're going to completely stop rate hikes. But they'll have to look at future data. They think that they are making a lot of progress, and there are several different things that are all coming together to make inflation come down. So I think it was largely a non-event, but I think it was a little bit more bullish than it was bearish for the markets. Now, talking about crypto and the reaction to this, we did see the market fall down a little bit. We saw Bitcoin go from about 28.7 right before the Fed meeting to now 28.4, as you can see here. But we've been in these channels. Some technical analysis and some TA analysts are saying now that we could see a jump. Basically, we've been between these two channels. We fell below it here, but then we bumped right against it, fell down, got rejected again, bounced off of it. So we could have another run up to 30,000 if we just got up to where we were previously, or a run all the way up to 32,000. Now, there are some miners that are changing up their game plan too, getting ready for the next bull run. CleanSpark just released their April 2023 mining update, and they increased the amount of Bitcoin they're holding by 60%. Now, part of that might just be due to the fact that Bitcoin's price has gone up a lot, because they mined for about 524 Bitcoin, and they only hold 313. So their corporate strategy has basically been to sell off their Bitcoin every single month and then reinvest it into more miners. But this month, they're actually holding an extra 117 Bitcoin from what they've mined, and they're holding it in their reserves. Maybe it's because they're fine on cash. Maybe it's because they think Bitcoin's going to go up very soon. Who knows? But they are changing up their strategy, and I think that's a little bit bullish too for the price of Bitcoin. When there are less miners selling, obviously the price is going to go up easier. Now, keep in mind, I am largely invested in Bitcoin. Like 83% of my crypto portfolio is Bitcoin. Another 12% is in Ethereum. Another couple percent are in other small altcoins. But I've really just been adding to Bitcoin over the last year. Up until this week, I did add a very, very small position in a meme coin. And, meme coins are pretty much fun, and they do offer outsized gains. There's also a lot of risk with them. I'm playing with like 0.2% of my portfolio, 0.1% of my portfolio. But I think there is a time and a place for them, which is why I want to cover a little bit more of the crypto market here. We see things like this happen all the time, though, and I wanted to hit on this. 𝗡cie had their token launch here today. They're down 70% in the last 24 hours. And this was basically a top 10 crypto. If you look at their fully diluted market cap, the market cap itself is $715 million. So according to this, when they came out at $4.50, it pretty much just dropped as soon as people got tokens. It dropped down to $172. But at this valuation, if it really was $4.50, that would be about a $2.2 billion market cap. The fully diluted would have been $40 billion, which is massive. It would have put it well in the top 10, closer to like the top 5. So kind of a crazy valuation there, but just be careful if you ever see a big layer 1 or a layer 2 even have a token launch. I would not buy it the day of. Typically, they fall down a lot. People get tokens and they dump them. So be careful about that. Now, if we start to move up, I am, like I said, largely invested into Bitcoin specifically, but there are some tokens I'm watching. I mean, 𝗡𝗍𝗩 seems to be a new meme coin, obviously, that's doing really well. It's having a pullback here today. Let's take a look at that. It's down 13%, and a lot of people just taking profits. I mean, there are a lot of people buying back here, all these people making tons of money, getting 5x's, 10x's, and they're taking profits now. So you have to expect that. Now, if we saw a big pullback, maybe it would be worth actually getting a little piece of it, in my opinion. Maybe it would be worth investing a little bit into, just because we have seen these meme coins, the top meme coins, typically stay around. They have good communities. Now, a couple other ones I'm looking at, 𝗡𝗍𝗩𝗡 coin. It's a play on 𝗡𝗡𝗩. I am working with them, but they are pretty interesting. They went up like 10x overnight. I have a friend who also invested in them like yesterday or the day before. I think it was 2 days ago, and had a 10x overnight with them. Invested a lot of money, got a lot of money out of it. Another crypto that I am interested in and actually invested slightly in is King Finance. I bought some of them this week. Obviously, these are risky. Let me be clear on that. But they are followed by some pretty big accounts. And actually, their CEO and co-founder was a huge account over on Twitter. And I think this could bring a lot of attention to him. There are a lot of big accounts that follow this guy. It's about a $30 million market cap now, but I've been watching them. I'll probably invest in them for a while, but of course, do your own research. I want to tell you too, I am going to the Bitcoin conference. If you haven't already signed up for that and you're interested in it, I went last year. It was a great time. Let me know. Reach out if you are going to it, because I'd love to be able to see you there. And I'm not an affiliate for them or anything like that, but it's definitely something that I want to get into. Maybe next year I'll be an affiliate for them, because it is a very cool event. Now, let me know your thoughts on all this underneath the video. Let me know if you are excited by what Jerome Powell said. Let me know if you're worried about it. And definitely check out the links underneath the video to NordVPN. Pay attention to meme coins. Pay attention to the crypto market and what's happening over the next week or so. Thank you so much for watching, and I'll see you in the next one.